So, good morning. Welcome to another episode on our weekly analysis. It's your regular host, Conduct World 2023 is gone. So we'll be looking into market analysis today, synthetic indices. We'll be enjoying some ride and looking into other things. Like over the week, last week, I got to understand some things. Like when markets were, I placed some trade that last week. Then I saw that market didn't hit some of my TP. Like before it gets to my TP, market tends to reverse. Then I did my study and I realized some things that there are some places that market really respected, which are called ambush zone, in which when market reach that area, it tends to reverse. So if your TP is below that area, the price doesn't get to reach that area and it reverses. And this really makes me lose some trade, because before it gets to that my TP area, it reverses, then it hits my stop loss. Then I'll be showing you when we are analyzing. Then another thing I got to realize is your lot size also. Your lot size also matter when you are trading. When to know when to use a big lot size. Apart from your risk management also, yeah, it's good to put good risk management in place, and never joke with that, your risk management. But there are some times whereby you have to use some big lot size. Maybe you are trying to build an account and you want to use big lot size. When the market is ranging, when price is ranging within a certain period, it's most advisable not to use a big lot size. It's advisable to just keep your risk very, very low, because market will just be moving from one point to another. Where you expect market to reach, it doesn't reach there, so it just bounces off, and before you know, you are encountering several losses. So in that kind of scenario, when a market is ranging, you don't have to, just keep your risk management very low. But when a market is trending, then you can increase your risk. And one thing about trading is we should understand that trading is building over time. It's not just get rich quick. It's about you building, and it's more of compounding. You have to compound to a certain level so that you'll be able to have this ability and capability to use some certain lot size. And one thing we should also know about trading is trading can give you that lifestyle you are looking for. Trading can really give you that lifestyle you are looking for, what you really need, and what it can give you. But are you patient enough for you to get that reward? Are you really patient enough for you to get that reward? Because if you are not patient enough, you won't get the reward the market's supposed to offer you. Because at the end of the day, you might have blew your account, then your analysis later played out. So in that kind of case, you want to protect your account very well. You want to protect it from being blown out. And these days, if you see price of dollar is just skyrocketing. So you don't want to undergo that kind of pain that you just keep funding and you're doing donation or charity to the market. No, you don't want to do that. So keep it safe out there. Keep it safe this week. And that's why we do weekly analysis, to know our best indices for the week in which we just want to trade and enjoy. And one thing is, once you identify the trend of the market, your risk can be a little bit high, and it's assurable that since you are not trading against the trend, then you be in profit. The market will always play in your direction as long as you are not trading against the trend. So without being said, we've been charged for this week, then let's go deep into analyzing our market. So let's look what we have for this week. So today I'll be analyzing boom 1000, boom 300, DEX 900 up, then DEX 900 down. So 1 2 3 4, this 4. So don't forget our top down analysis. So we are going to our monthly time frame. So let's see what do we have on monthly. Let's see what we have on monthly. So on monthly time frame, we see this huge candle, this bullish candle actually, this bullish candle. So then we see market retracing into this bullish candle. So let's measure it. We see market retracing into this bullish candle. So we see that market has reached this retracement level, then it bounces off. It sells down into this retracement level, then it bounces off. So then our sell stop for this market is 10,300. So at 10,300, market will tend to buy up massively. And on this zone, we can also see an order block also. Not even another block. We can see an ambush zone here. This is an ambush zone. This red candle. You know, I talk about ambush zone. This red candle is an ambush zone. A large sell. This is an ambush zone. So I want to identify this place by putting this arrow on this area. So, and I'll mark this area out. So I know that anytime price reaches this area, it will definitely buy up. So let me come to my lower time frame. On weekly time frame, what do we see? We see this order block being formed. We see this weekly order block being formed. Then let's measure. Where's our last sell to our last buy? This was our last sell. This was our last buy. So we see market reacting on this fib retracement. So I want to mark this place out. So we see this buy because of the retracement. Fib is a very nice tool. It's a very nice tool. So we mark that area, this retracement level. Then we want to mark this area also. Don't forget that we don't want to go below 10,300. Actually, we don't want to go below 10,300. So let's come to our daily time frame. So coming to daily time frame, we see this happening. So let's come here. From here to here. See this retracement level, equilibrium, then yeah, this is our retracement level. We see this rally up because of this red candle. That's why we see this rally up. So let's come to our 4 hours. So to take a sell on this time frame, we want to see this engulfing candle form. We want to see bearish engulfing candle. So once bearish engulfing candle form, we want to do like this. Once this is bearish, this red candle fully form and it engulf that bullish candle, we want to measure from this area down to this area. So this will be our next TP here. So from here, it will set down from here down to this area, to this 10,300. So this week we are expecting price to move from 10,700 to 10,300. 10,700 to 10,300. So let's see how it plays out. So that's that for boom 1000. That's that for boom 1000. That's that for boom 1000. It is a sweet. So it's going to be sweet sale. A sweet sale. So let's come to boom 300. Let's come to boom 300. Let's come to our monthly time frame. Let's come to our monthly time frame. We cannot see any visible thing there. So let's come to our weekly time frame. So let's come to our weekly time frame. On our weekly time frame, we see the market has break up from 500 level. It has break up from 500 level. So let's come to our daily time frame. Now our daily time frame, we see my price ranging from 500 level. So let's do like this. We want to first draw a trend line for this. So we see that the market has been respecting this. Price has been respecting this trend line. Price has been respecting this trend line. So what else do we want to do? So this is the last bullish candle, and we see price selling into it. So we want to do like this, which is this is an impulsive candle. So okay, first of all, we want to this is another block. So price might hit this level and start buying up. So we want to first do like this, because that other block is also an ambush zone for market to hit and start buying up. So I measure this. I really learned a lot last week. I learned a lot of lesson, and this makes me lose some certain amount of money. Although it was a lesson I paid for. So I want to do like this, then come to 4 hours to mark some certain zone. I want to mark my retracement and my sell stop. So this is my retracement. Then this is my sell stop. So coming to 30 minutes, my entry level. So this is my first area of take profit, and this will be my second area of take profit that I'm interested in. Those two areas, I don't joke with them. We do like this. So I'm expecting market to sell into this region. I'm expecting price to come into this region. So that's for boom 300. For let's come to down first before we go up. So let's come to our monthly time frame for this market. DEX 900 down. So we see that it has been selling on monthly time frame, weekly time frame. It starts the selling, then is ranging into this region. It's buying into this last bearish candle. So we want to mark our retracement level first. Then we want to mark our sell stop. Then our buy stop. So those key area. So that is 30%, 70% and 100% into that candle. So it can do 30%, it can do 100% or 70%. So we'll see how it plays out. Continuation sell. Don't forget the overall trend, it's a sell. So it's your order block on lower time frame that signifies the continuation sell. So let me come to my daily. So this is what daily is saying. See what we have here. So now I'll look for my last buy. This was my last buy. Here was my last buy to my last sale. This was the last sale. So having done this, I can just mark this level, then representing it with this. So I'll be expecting price reaction in 2 ways. So let me come to 4 hours. So we see this happening. So I'll be waiting for a retracement. If I want to buy this, I'll wait for retracement, then impulsive move. So coming to your 30 minute, you see this happening. So you want to see something like this, then a short sell, a long buy, then a continuation sell. So that's for DEX 900. We see this pull up from this level. So let's come to DEX 900 down. Come to your monthly time frame. You see this happening. Then come to your weekly time frame. We analyzed this last week. So coming to your weekly time frame, you measure from here your last sell to your last buy. This was the last buy. Then I mark this retracement level, then this sell stop level. Then let's mark this final place. We see that price is heading for this region already, so we can mark that buy stop and sell stop. So mark that buy stop and sell stop. So let's come to our daily time frame. You see this happening. So you see this. So it's heading to 12,000. It's heading to 12,000. It's heading for 12,000 region. So comes 30 minutes. So once this 30-minute order block is formed, this fully engulf this by 4 a.m. Then we are looking for something like this. So we are looking from 12,200 to 12,000. We're looking from 12,200 to 12,000 for a sell for DEX. So we are looking for 12,000. Oh, we are looking from 12,200 to 12,000 for a sell. So that's all for today. That's all for this week. So we look out for boom 1,000 for a sell for this week. We look for boom 300 for a sell for this week. DEX 900 up for a buy for this week. Then DEX 900 down and up. So let's see how it plays out. So keep your risk low, put your head up, and with God all things are possible. Make enough profit and be proud of yourself. Be a good ambassador out there. Trade and enjoy, and make sure you take care of your health. See you next week, same time. I remain myself, Consult Wealth Synthetic.